it is, it's great to see everyone. Thank you again for taking the time to commit and to continue your education. Again, there's nothing better you could be doing. There's Janet's face. Good to see you,
Yes.
Janet. Oh, look.
Yes.
All right. Perfect. Great to see you both. So again, before we get started today, I just want to share kind of what's coming up as far as the schedule. So I'm just going to pull that up really quick here. So today we're going to learn about accounting for beginners. And so don't get, we're just going to walk through some simple terms, some simple things that are going to help you make better decisions in your business once you know your numbers. We're going to talk about that here. The next week, we're going to do maximizing your online presence. So can your clients find you online? We're going to talk about SEO, about Google, about paid SEO versus free SEO, a lot of things. That's always kind of the question of how do people find me online? Are they finding me? What are some tips I can do to help me? And then we have 4 more sessions in November. And so I just really encourage you to make as many of those as you can. We're going to be here the same at 9 o'clock every Wednesday. So let's go ahead and I'm going to take that off really quick. Then I will share in the chat box today the notes. And so feel free as always to, today is going to be here we go, lesson 3. I went ahead and shared the notes into the chat box. So I'm going to share them on my screen, but feel free to download those. We can always email those out as well if you want to follow along or go back to them. So before we get started, I just want to remind everyone that the information that we're getting is right off the native360.org website. And it's through an amazing tool called Initiate. And so I would encourage you again this week, if you haven't signed up for Initiate, to do it. It's an absolutely free resource. I want to show you what that looks like real quick. And so all you have to do is go to native360.org. You click on the small business toolkit and register for Initiate right here. So all the information that we're going over today is right here. All you have to do is set up a simple username, password, and you can get in and view the information. So if there's anything that I go over today that you want to know more about, just remember that this resource is here for you. Not only about accounting, but about all sorts of tools on marketing, on there's calculators, on writing business plans. Log in here. There we go. So again, there's information on here on startup, money, marketing, management, just a whole bunch of resources here that are provided from Native 360. This is an incredible resource. So if you're not using this on a weekly or monthly basis, I would really encourage you to dive into this website and use this free tool. So this is where we got our information from today. A lot of our information, besides just some real life stories, to kind of go into what we talk about today. So today we're going to talk about business accounting. And oftentimes when we talk about accounting, people kind of check out. It's not the fun thing, especially if you're a creative mind. Accounting is not something that's usually, the first thing we want to talk about. But I have really learned that if you don't know your numbers, it's really hard to make decisions in your business. And as soon as you know your numbers and you can just rattle them off, if somebody asks you what the cost is on something, what your markup is, some of those words that we went over a couple weeks ago, if you know your numbers and you're confident in your numbers, then as you're making decisions, let's say a good deal comes along where all of a sudden, if you buy this today and you buy in bulk, we'll give you this price. Well, if you know your numbers and you know what you normally pay for that, maybe it's really not a deal. Maybe it's just kind of marketed that way. Remember when we talked about how to set those pricings and some of those strategies? Well, your people who are selling to you are using those same strategies. Have you ever done that, like on Black Friday? Maybe you went out and you thought you just got the best deal, and then you go to the store 2 or 3 weeks later and it's the exact same price. So oftentimes when we see those deals, we get excited, or maybe an opportunity, maybe a loan comes along, maybe a refinancing opportunity comes along, maybe partnering with Native 360 comes along, and you don't know because you don't know your numbers. And so I would encourage you that While I always recommend, and people too, having a professional, having an accountant in your corner, having that person on your team, just by having the basic knowledge, understanding it, is going to empower you. And that's really, as a business owner, what is so important, is feeling empowered. So let's go over some of this today. I'm just going to pull up my screen here. Are there any questions before we get started? Anything from last week or anything just from this week that you guys, any situations that you're dealing with that you want to make sure that we cover, or questions that you make sure that we cover? All right. Well, if not, we'll go ahead and we'll dive right in. If you do have questions, feel free to unmute yourself, to speak up, to raise your hand with the little icon or whatever is easiest. You can also type your questions in the chat box. I'll keep an eye on that as well. All right. So I have my notes up right here in front of me. These are the exact same notes that are available to you. And I would encourage you to look back at these. So again, when we talk about what is accounting, what is business accounting, it's really not that different than the personal accounting you do at your home. Every day at your house, you're paying bills, you're getting some kind of a paycheck in, and you're balancing that out, trying to figure out what to pay, when to pay it, how much money to bring in, how to make extra money. It's the exact same thing with your business. And so just think about the first time you started getting money and the first time you started paying any kind of bill. You were probably 12, 14, 15, 16 years old. And so think about, while you might not be an expert in business accounting, you've probably been doing some kind of accounting since you were about 15 years old. And so if you kind of keep that in the back of your head, remember that this is nothing brand new. These terms might be a little bit new, but the process itself, you are a master at. So the reason that we want to talk about this is accounting is really just a process of recording, analyzing, and interpreting your business's financial information. And this second part is very important. So business owners use accounting to track their financial operations, to meet legal obligations. And this is the one that I really think is important. Besides those first two, which we have to do, the reason business accounting is important is because we can make stronger business decisions. And again, that is why it's important. The other two, it's important to have done. But if you are only focused on financial operations and legal obligations, it's very easy to hand that all over to your accountant and kind of walk the other way. But if you truly want to be able to make stronger business decisions, you need to understand these numbers, and that's what we're going to talk about today. So let's go over just a few of these accounting basic terms. These may be terms that are thrown around. Maybe they're brought up in financial meetings, but you don't quite understand what they are. So let's talk about them just a little bit and maybe when you'd use different ones. So regardless of who manages your business accounting, it's wise to understand these basics. And if you can read and prepare these basic documents, you'll understand your business performance and financial health. As a result, you'll have greater control in your company and your financial decisions. Part of the reason to be an entrepreneur is because you truly have control in your business. And by knowing accounting and understand accounting, you truly feel in control. It's often to be in control, but if you don't understand this, and when your accountant is talking with these things, and if it scares you a little, that it's hard to feel in control. So let's take some of that control back today. So the first one is the income statement. An income statement shows you your company's profitability and tells you how much money your business has made or lost. Pretty simple. Sometimes banks will have different versions of this, or different people have different versions, but at the end of the day, it really just brings all these information together. So at the end, you have a total of how much your business has made or lost. A balance sheet is a snapshot of your business's financial standing at a single point in time. A balance sheet will also show you your business's retained earnings, which is the amount of profit that's reinvested in your business. So you may want to see a balance sheet for a month or for 6 months or for a year, but a balance sheet is more at a single point in time, where an income statement typically lives a little bit longer. Your profit and loss statement, this is often called your P&L. So let's say that you're talking with a financial institution. They say, yeah, can I see your P&L? It's really just your profit and loss statement. It's pretty simple. And it is a snapshot of your business's income and expenses during a given time period. So again, they might want to see your annual P&L or your monthly P&L. So again, it's just a snapshot. Now, on a lot of this accounting, things change every day. You could just prepare all these documents and then you get a check in the mail or you have to pay a bill. So, everyone in the financial world understands that we set parameters or we set dates, but knowing that things change. And so that's why oftentimes these are done in some kind of a QuickBooks program or an Excel spreadsheet that continuously updates. You're never going to want to create these balance sheets or profit loss statements on like a one-time thing, because as soon as you get it done, it's going to change. So that's why there's really great tools out there, and a lot of those great tools are Write and Initiate. A cash flow statement analyzes your business operating, financing, and investing activities to show how and where you're receiving and spending your money. So this is going to list out your vendors. This is going to list out your subscriptions, your taxes, your insurance, everything like that. Because often, remember the other day when we were talking about our wholesale pricing, let's say that you buy a sweater for $10 and you sell it for $20. We might think that our only expense is at $10, but that's not true. And that's why this cash flow statement really helps us understand, again, if there is a point of sale system that we use to sell that sweater, or taxes, insurance, heating, air, rent, all of those numbers go into that. So that's why all these are so important. And then bank reconciliation. Now, this is something that is often put off till it's time to do taxes, but this is something I would really encourage you to do on a monthly basis. We always do our reconciling right after the first of the month, typically the first or the second of the month. And really all it is we're comparing our cash to our bank statement. We're making sure that our records are clean and everything's consistent. So let's say we're going through our bank statement and we find something that we bought on Amazon that we needed for our business. That's a good reminder to go back, double check that, print off the receipt, file it where it needs to go, so that every month everything is ready to go. So we can say we've reconciled September. So then when we go to do our taxes, we're ready to go. It's always overwhelming when you get time to do taxes and all of a sudden you have no idea what this charge was. It's often easy to miss expenses because maybe the charge isn't very clear what it is. Maybe it says XYZ company and you don't know what that was. But if it was just a couple weeks ago, you probably remember, oh, maybe that's when we got our windows washed. Well, that's a business expense. I need to track down that receipt and make sure to categorize it in QuickBooks. And so bank reconciling is a great way to stay on top of it. And if you do it every month, it's really not as overwhelming. Pete, is there anything you want to add about these basic 5 terms, or are there any questions? Again, I'm not an accountant, but this is just kind of a real quick overview. Does anyone have any questions or topics on those 5?
I really like when it comes to like your profit and loss and your balance sheet, especially I think the profit and loss section of it, you really need to keep track of every line item category. And a lot of times at the end of the month, just do like a complete printout of everything that went in that particular category, because sometimes you may put something in a category such as marketing that should have went into another category. But it's just good to go down each line item and just make sure everything is where it's supposed to be. Mm-hmm. I think probably the most important thing this does, it's kind of like your report card for your business to a certain degree. It tells you you're making money or you're not making money. Mm-hmm. And I don't know how many times I hear this, but and I hear it a lot, is that it seems like all my vendors are getting paid, but I'm not. And what that tells me is that you just there needs to be expenses that are eliminated, and it's usually all of your vendors are getting paid, but there's not enough money at the end of the month to pay you personally. So that's always an issue.
Absolutely. And I always say that the profit loss statement, we always use that too as a snapshot or to really look at that, because maybe something seems really off. And sometimes it's just a typo. Maybe you had an extra zero somewhere. Or, it's a good way to look and say, man, in our office supplies, maybe typically we spend $100 a month in office supplies. This month we spent $400 a month in office supplies. What went wrong? Why? And really kind of diving into, and maybe there is a really good reason. Maybe we had to buy something for a presentation or something like that. But it's a good way to see if one category is seems very high or low compared to other months, and to kind of think about that, because if you don't catch that till the end of the year and all of a sudden your office supplies goes up little by little every month, but it's all grouped together, you might not realize that that's kind of the bucket with a hole in it, as we say. So there may be some ways to cut down. Maybe it's as simple as, not buying it, maybe cutting down on your number of copies, or reusing some things over and over, not throwing away file folders, but reusing them. Some different ways that you can make those smart business decisions if you know your numbers. But if you don't do your numbers, and then at the end of the year, whenever you have to put together a profit and loss statement, you say, oh my gosh, I can't believe that we spend $2,000 a month in office supplies. Where did this go? So it really helps you stay on top of that. I like what you said, Pete, about a report card. That's exactly right. All right, let's keep going here and talking about a few other terms here that are important to know. So we talk about account receivables. So account receivables are the amount of money owed by your customers after goods or services have been delivered or used. So account receivables is the money that you get in. Now, you might get money in different ways. Maybe you get some money in from products you sell. Maybe you get some money in for time you spend as a service. Maybe you get some money in from a subscription or other things that you offer. But any money coming in would be accounts receivable, and then account payable is going to be just the opposite. The amount of money you owe creditors, suppliers in return for goods and services they have delivered. So if somebody says, can you please list out your accounts receivable? Really, all that is anyone who's paid you money that month. And then if someone asks you to list out your accounts payable, that's going to be anyone that you wrote a check or use a credit card or a debit card to pay. So it's really not that complex. It's very similar to when you keep a registry in your checkbook. It's just really what you're paying and what's coming in. You're going to also want to know about your current assets. Assets are assets that will be used within a year, typically cash, inventory, accounts receivable. So assets could be your bank account, they could be stocks, they could be things that typically change are going to be your assets. Those are going to be, again, things that flex a little bit, but then we also are going to have our fixed assets. Fixed assets are more long-term. So that's going to be like maybe a building, land, equipment, machinery. So those are important as well, but they don't change as much as your bank account does. Now your accountant's going to talk to you a lot about depreciation. So depreciation is a systematic allocation of a cost of equipment and buildings used in a business from a balance sheet to the income statement over a useful time of its assets. So what this means is, let's say that I buy a camera for $5,000, and this camera for my business lasts me 5 years. Rather than taking all $5,000 off my tax return as an expense in year one, I could take $1,000 off a month for the next 5 years. Now, everything kind of has a different depreciation value, and you can't depreciate everything. It does have to be over a certain dollar amount, and the life of it has to have a certain amount. So if I buy $5,000 worth of prime rib steak to serve at a dinner, obviously that doesn't depreciate because it doesn't have a long-term value to it. But my camera has a long-term value, at least like a 5-year value. And your accountant can really help you with all of that. But when it comes to, again, buildings, land, machinery, very expensive items, it may be wise to spread that over a few years versus taking it all up front. Typically, when you start out, you have a lot of expenses. So if you write them off all the first year, when you're not making a lot of money, you're not going to have a lot to deduct years 2, 3, 4, 5. So that's when a good accountant really comes in place to help you decide how much and when to take that depreciation. Okay, are there any questions over these 5 terms before we go any further? All right, we're getting some thumbs up. Is this making sense? Janet, thumbs up from you? All right. So, thumbs up from Sarah. All right. Let's keep going. We'll have lots of time for questions if there's anything at the end too. Let's talk a little bit about bookkeeping and what is bookkeeping. And so some bookkeeping you're going to want to do on your own, and then and some you may at some point want to hire out. We at this point hire out some of our bookkeeping, but there's always things that we have to do. Even if you hire a bookkeeping company, they're not with you day to day. They're not shopping with you to keep your receipt. So just know that there's always bookkeeping. Some might be able to be hired out, but we're going to go over practices next. So let's just talk about first in general, what is bookkeeping? So bookkeeping refers to the process of organizing and recording financial transactions for a business. It's crucial to have good bookkeeping practices in place because this is a primary way to determine if your business is profitable. It is also vital for making sure you have accurate and complete information for income tax preparation. At the most basic level, bookkeeping is keeping an eye on your numbers. And again, the more you know your numbers, the better decisions you can make. If you can get anything out of today, that's what we're going to drill home. It really makes you empowered and it makes you be able to make those decisions with confidence. So the better you can do at bookkeeping, the better decisions you can make. When you have a good sense of where you stand, you can make informed decisions about your business's future. You can also address financial challenges early before they get into big problems. And sometimes in the world of entrepreneurs and business, sometimes the numbers just don't work. Sometimes maybe for a month or two. I know with COVID, part of these classes is to really help us come back from COVID. Sometimes there are things outside of our control, and for a month or 2 or 3 months, maybe the numbers just don't work. But when you have good bookkeeping skills and you understand and you can take control of your numbers, you can see those challenges early. You can maybe predict those challenges, and that's when you can have the open communication with your lenders. You can reach out to Pete, you can reach out to banks, you can reach out to your vendors, and you can say, hey, just so you know, I know this bill is due in 2 weeks. Based on my numbers, I'm going to be a little bit short, but this is the action plan I have in place. And communication is always key. Pete, would you agree with that?
Yeah, definitely. If you see a shortfall coming, or especially the businesses that are seasonal and where weather like a blizzard will really affect their sales and things of that sort, always reach out and just let your bank or myself know what's going on, and generally we're going to work with you.
Yeah, but you're always going to have a better result if you can say, hey, I'm looking at my numbers today. That blizzard, it hit me harder than I thought. I know we have bad weather coming up. This is what I anticipate. Maybe this is best case scenario. This is worst case scenario. But if you can know those numbers, you can have those intelligent conversations. And that's always better than saying, oh crap, I haven't had money for, looking back or kind of being shocked, because if you're in control of your business, you really shouldn't be shocked by numbers. You should know what you're spending. You should know, there's always going to be a little bit, but nothing should be just out of the blue shocking. It might be, again, worse than I hoped or anticipated. But I would say if you're coming up with a situation where you're just shocked about what your account looks like, that means that you're maybe not doing the bookkeeping in place to have a better idea. Just like in your own finances, you know about what you pay for gas, you know about what you pay for insurance, you know about what you pay for groceries. Obviously, it's changing. Grocery prices are going up, gas is going up. But if you went to the grocery store and every month you usually spend about $150, let's say, and then all of a sudden one month it's $800, you would be shocked. And so if you know your numbers, if it's something that you do monthly, then you shouldn't be shocked. So let's talk about some of these bookkeeping tasks. So a few of them would be recording your business transactions, sending invoices to customers, making payments to vendors, making bank accounts and using your bank accounts properly, payroll preparation if you have employees, and preparing financial statements and reports. So those are the bookkeeping tasks. Some of them are done daily. Some of them may be done weekly or monthly, but these are the bookkeeping tasks that are just done on an ongoing basis as a business owner. And there's probably a lot more, but that's a good checklist. And I would really encourage you. I am not a detail person. I am more of a big picture, big idea, brainstormer, strategy type personality. And so while I can sit down and do numbers and I understand them, I always like to see the overview. I'm not a detail person. And so if you do have a business partner, a spouse, a friend, someone on your team who is more of a business detail person, that's who you're going to want to really help you with that reconciling and that bookkeeping. Because when it comes down to, especially when you're doing payroll and some of those things, you might not think 20 minutes matters here or there when people clock in or clock out, but over time it really does matter. And so you're going to want to get those numbers as close to what they are as possible. Because again, those few dollars, those few cents, that little bit of time, it may not seem like a big deal, but when you see that profit and loss statement over time, that makes a big difference. And so I'd really encourage you to, if you're a detail person, this might be great, but if you're not, don't let that handicap you. Don't let that be your excuse for why you're not doing bookkeeping. You just may need to find someone who that is more of their strength. So in my household, while I love to see the big picture, my husband Dana is definitely the detail. So he does the majority of our our personal family bookkeeping. And then we have someone in our office now who does the majority of our business bookkeeping. And then she just kind of gives us an overview once a week. And then we sit down once a month. All right. Are there any questions over just kind of the bookkeeping tasks? Next, we're going to go over the good bookkeeping habits. And that's something where I want to spend a little bit more time on really how to put this into practice. All right. Let's dive right into that. All right. So now let's talk about some good bookkeeping habits. So if you want to, make a to-do list or some goals, this is what they're going to be. And again, this is all provided on the notes for you. So if you don't want to write this all down, you can sure just use this note and use this as a checklist. So as a business owner, it's essential to create a system for organizing bookkeeping tasks. A dedicated system will make it easy to find receipts and keep you up to date so you don't have to scramble when tax season comes around. One thing you can do right now to improve the way you handle your books is to create a set of simple bookkeeping checklists. These lists will give you a quick, reliable way to streamline basic financial tasks throughout the year. So let's kind of go through this. And again, tax time should not be an overwhelming time. You're so busy in your business that you don't want tax time to take away from your business. So the more you can stay up to date with your bookkeeping, then when tax time comes along, you're really just finalizing details, handing over reports, but then you can still run your business day to day. So let's go through the daily checklist. So this is something that ideally you do every day, if not every day, at least every week or as often as possible. So we're going to refresh your financial data. So you may want to sync your bank account and credit card feeds, sales data from your point of sale system, and any other automated financial transactions. So nowadays, with so much being web-based, you may want to look into if there's a way to sync your bank account, your credit cards, maybe your point of sale system, your QuickBooks. A lot of this is already built to work together. So rather than exporting data importing data or retyping in numbers. A lot of times when we have to retype in numbers, that's when errors occur. And so if we can let one system talk to another system, as long as they're obviously trustworthy, reliable systems, that can save you a lot of time and a lot of errors just from letting that happen. My husband and I own an ice cream shop, and we use a point of sale system, and it provides us incredible reports. And so if we want to know how much of each type of product we sold per day, per week, per month, what coupons were used, how many discounts were given, it provides us a lot of data. And so we obviously have to understand how to read that data. But if we can let that data come to us in reports, or even better, sync, it's only going to help our financial snapshot be that much more accurate. We always want to reconcile cash against receipts. This allows us to discover any shortages or overages right away. So if you do have a cash drawer, I would recommend reconciling that daily. If you have a lot of employees, you may even want to do that at a shift change. Because let's say that all of a sudden our cash drawer is $40 short. If we did that at a shift change, we may be able to ask an employee, hey, this is $40 short. And they might say, oh, that's right. I needed $40 in quarters. And so I swapped it out, and I must have forgot to, I must have forgot to pay the bank, or however that worked. It might have been something very simple that they just forgot. Maybe they took $40 to move it to another drawer and they forgot to put it back. Whatever it was, the faster you can catch errors like that, the easier it's going to be. And again, it may be $40 one day, $10 the next day, $5 the next day. So it may not be a lot, but if you add that up and at the end of the month, you might want to try to figure out why you're $400 off. That's going to be a huge task. It's also a great way to monitor those little things. So if there is anything unhonest going on, maybe there's a weird system where we're always running out of quarters because everything that we sell ends in a 25 cents. Everything's 6.25 or 7.25. So we're always out of quarters. That might be something that you can catch early. We always want to record transactions. So invoices that you send, payments that you receive, making sure that as you write checks, you have a good system to record that check, whether it's a carbon copy, whether you make a note, whether you get the printouts from your bank. But you always want to make sure that you're recording the transactions. We've had that happen several times when a vendor will say, hey, we didn't get your payment. And because we did a good job of recording that transaction, very quickly we could go back and we can say, oh, actually we sent a check on the 2nd of the month. It was check 7726. We mailed it this day. And that allows us at least to say, please double check your records. Maybe it did get lost in the mail. Maybe it got sent to the wrong place. Mistakes happen. But if we have good records on our side, then it's not just an unknown, and that may save us from sending another check or an error happening. All right, let's talk about recording any payments, deposits, cash, or checks. It'll save a lot of time and hassle if you use a business bank account with mobile deposit features. I would really recommend taking some time to look at your business banking account, especially if you haven't for a few years. Really sitting down with your banker, making sure that you're on the right account. Sometimes banks have new features, new accounts. Maybe if you have fees that you maybe taking some time and looking at how much you've spent in bank fees this year, and maybe there's another account or even another bank that's better for you. We have a few months of the year where our business has school photos. And so we bring in thousands and thousands of checks just for about 2 months out of the year. And so we were with one bank that only allowed us to deposit 30 checks a month. And then after that, we got charged 15 cents per check. Well, that typically doesn't seem like a big deal, but when we're depositing 4,000 checks, those fees add up very quickly. And so we ended up finding a different bank and a different type of account that allowed us unlimited checks for those times of the year, knowing that it wasn't a regular occurrence. So if you do have something unique like that, like maybe you have a lot of very small credit card payments, maybe you have something that's unique, talk to your bank. And that's something you should do about once a year anyway. Just sit down, have the conversation, make sure there may be things that you're not using. Some banks offer free checks and you may not be taking advantage of that. Maybe you need checks, but you don't write them because you're almost out. Well, maybe just a simple conversation um, with your bank. Maybe they'll offer you a commercial check that has more of a bookkeeping system to it. So just have that conversation. Record any inventory you receive. So let's say, and I would also add to check any inventory. So when you get a box in, don't just assume that whatever you order is in there. Make sure you take a chance to look through it, count your inventory, make sure that what you order is what you received as soon as you get it. Because if you wait, let's say that we got a box of 1,000 something and they're broken down into boxes of 100. So I would quickly count and make sure I got 10 boxes of 100. Let's say I only got 8 boxes. It's going to be a lot easier for me to go back to that vendor that day or within a couple of days than if I waited 6 months and then I went and I said, hey, I just used my 8th box and I was supposed to have 10. At that point, it's really hard to have that conversation. And so I would just really encourage you to record, keep track, and count any inventory that you receive, because once you receive it, it's really your job to check that. And then back up your data. So if you are using a QuickBooks program that isn't a web-based program, make sure that you're backing it up. Anything that you or have on your computer, computers do crash. So make sure that you're backing that up either on a hard drive or on the cloud, or it's on some kind of web base, so that you'd hate to do your reconciling all year long and then lose your data. All right. Is there any questions over just that daily checklist? These should be things that you're doing already, but hopefully this encourages you maybe just to step it up just a little bit. Are these things that you're doing kind of on a daily basis, or maybe even without thinking about it, you're doing it? And you can kind of decide if you want to go paperless, if you like having paper receipts. We kind of do a hybrid of both in our office, but knowing that you may not need to save every receipt, but let's say that if I needed to go back to it, as long as it's documented, like I know from our camera company that I have access to an online, like our online account. So if I ever needed to go get that receipt, I could easily log in and find the receipt within a few minutes. So I may not need to keep the physical paper copy of the receipt, but just knowing that depending on how comfortable you are with things online, knowing that you may want to go one way or the other. All right. Let's talk just a little bit about a quarterly checklist. Now, when it comes to these items, I would absolutely always recommend talk with your accountant, ask them what makes their life easier. Depending on your business, your size of business, if you're a partnership, a LLC, a sole proprietor, these may be different. So make sure that you talk to your accountant and make sure that you're doing everything that they need to do. So, but some suggestions would be calculate a new profit loss system. This should be done monthly, if not quarterly, to just, again, that report card, like Pete said, to know where you're at. If all of a sudden something seems off, to kind of be able to check that and make sure that you can kind of get on track easily. Prepare quarterly payroll forms, make quarterly tax payments. Again, if this is something that you're doing on a quarterly basis, make sure that those are done so that you stay on top of it. Review sales tax, remit payments. Again, depending on your filing, but make sure that if you are filing quarterly, you're staying on top of that. And quarterly, contact your tax preparer. This would be a good time just to touch base, make sure that you're doing everything right. And I know with our tax preparer, as we're growing, he may want to meet more often. And then as our business stays the same, maybe less frequently. But as you have questions, don't hesitate to reach out. Even if they bill you for that half an hour to sit down, it would be worth it to make sure that you're doing things the right way. Some things that may be on an annual checklist: review any past due receivables. Look at any invoices. This should be done more often. I know in our office, we keep track of anything that's 30 days, 60 days, 90 days past due. So really keeping track of, again, people will reach out to you if you're past due. So don't hesitate that if you have clients that are past due, to figure out a system, whether that's just sending a friendly reminder. A lot of our invoices go by email, and sometimes they do end up in a junk folder, or sometimes they don't go through all the way based on the individual security of their email. And so one of our practices that we do is if something's 30 days past due, we just print out the invoice and mail it, just because maybe it's not their fault, they just didn't see it. So that's kind of our step one as a friendly reminder. Usually when things are 60 days or 90 days past due, that's when you might also get a phone call or a note, a handwritten note on the invoice saying, please call us to set up a payment plan or something like that. At least annually, you should thoroughly evaluate your inventory. Perform a physical inventory count. So let's say that you're just routinely, let's say that you have a restaurant and you order a can of, what's something you'd order a can of? Maybe a can of I don't know, mayonnaise, let's say every single month. Well, let's say that at the end of the month, you still have 6 cans left. So that may tell us for this next year, we want to change our inventory so we're only ordering it every 2 months versus every month. So we really need to perform a physical inventory count to see where we're at, because we don't want to have those expenses continue if that's not something we need. This is also a great time to go through, check expiration dates, maybe to recheck your vendors and recheck pricing, make sure that you're getting the best deals, talk to new vendors. At least annually, you should be doing this. And this also could be with, again, your bank, your taxes, or your bank with your insurance, getting some new quotes, things like that. You want to make sure that you're completing time-sensitive paperwork. This includes W-2s, 1099 paperwork, any other payroll forms, any statements that are due to employees or contractors. And then you're going to want to make sure that you talk to your tax preparer and file your annual tax return. So those are just kind of a basic checklist. Now, like I said, there's a lot more information. There's a section on the native360.org under small business tools. When you log into your Initiate platform, there's some information that's called accounting definitions, good bookkeeping habits, and bookkeeping reports basics. So if you click right from that PDF, it'll take you directly to the website. Oh, I might have it up right here with I'm sharing, but it'll take you directly to the website and you'll see exactly what I'm talking about. But these are just 3 of the many resources on the Initiate website that can help you work through these processes. All right, so we have about 12 more minutes today, and I want to be respectful of your time, but does anyone have any just kind of general questions or maybe tips or tools that they have used in their own business that would help the good of the group, or maybe anything that you're going to add to the top of your to-do list after our class today?
I was just going to say, I like how you address late payments.
Uh-huh.
Like wait after the 30 days and then, okay, we'll mail it. And then I think that's a good idea because we have that issue. And it's kind of like, okay, like how many times do you bug somebody? But if you you do it different ways, I think that's a good idea.
Yeah, we always try to think of that. We always talk about a funnel and friction. And so maybe the friction was simply that it went to their junk folder. Maybe the friction is that they don't check their email. Maybe the friction is that it gets sent to an email that's not the bill payer. And so it might even be as simple as saying, maybe on that call at that 60 days, say, hey, we've been sending invoices to julie@tallycreative.com. Is there a better email that we could be sending these invoices to? If someone said that to me, I'd say, oh, yes, absolutely. I'm not the one in our office that pays bills. So I'm going to give you Dana Dennison's number or email because she does our accounting. And so it might be even asking some of those questions of, am I sending this to the right email? And that's a really polite way to ask someone if they've gotten your email without saying, I've sent you 5 emails, I haven't heard back. Even just saying, taking it on yourself and saying, maybe I have your email address wrong. Is this the best email for you? And I always like using that word best email, because if I just say, is this your email? Yes. Like I have an email that I created, 10 years ago. Do I still have it? Yes. Do I have access to it? Yes. But is it my best email? No, it does not go to my phone. It's not something that I check on a daily basis. And so that's something that is always a polite way to ask. Is this your best email? Is this your best phone number? You could even ask, is emailing your invoices the best way to get them to you? Or would you rather us print them off and mail them to you? And so kind of think about it that way. And sometimes it does come down to their billing cycle. So maybe it's asking them, is it best to bill you at the first of the month? Well, if they don't get paid until the 20th or maybe the 15th, maybe the first of the month is not the best to bill them. Maybe the best to bill them is on the 17th of the month. And so depending on how much flexibility you have, that might be some of those things in that funnel that are causing friction. That doesn't mean that they're a bad person. It doesn't mean they don't want to pay you. It doesn't mean that they don't value your service, but it's just simple friction. And if there's a way that we can overcome that friction, then that's a pretty simple thing. If changing an email address, if mailing something, if taking a credit card over the phone, if that removes that friction, then that's a pretty easy solution to get an invoice paid. And I know that that is something we work so hard to make the money that oftentimes collecting the money is kind of the last thing on our list. Like, I don't want to hound people. I don't have time. But typically people, if you have a service, you have to pay for it. If I go to the grocery store, I understand that I'm going to have to pay for whatever I put in my cart. So if I go get a new windshield at Ashley Glass, I understand that it's not free, that I'm going to have to pay for it. And the more I think we can be upfront with our pricing and our process, then when that invoice comes, it's not a shock. It's just more of a technicality of, okay, the work's done. Here's your invoice. You need to pay it. What's the easiest way to pay it? It's not a question of, are you going to pay it or not? It's just, how can we help you remove that friction to pay it? And then it's really up to you what process. But like I said, by setting up something, maybe at 30 days, we do this, 60 days, we do this, 90 days, we do this. Then you kind of know that that's a process, at least a template that you have in place that may change a little bit depending on the customer.
Okay, thank you. That's good information.
Absolutely. And don't be afraid to, again, charge for what you're doing. Everyone kind of understands that we all are making a living. You're not, this, and just kind of in a very polite way, kind of reminding people that, we have expenses on our side, we have vendors on our side. So, as soon as we can get that payment in, that really helps our business as well. And hopefully if you can do that in a respectful way, people understand that.
Okay.
Are there any other questions? Yeah. Are there any other questions? Are there any kind of thorns in the side when it comes to bookkeeping, billing, accounting? Pete, is there anything else you want to add about anything that we talked about today?
No, if you have questions or anything, give me a call and I'll get you connected with our accounting team, and then they can kind of walk you through things too.
Yeah. What I have really learned is you are truly an expert in what you do. If you think about what you do on a day-to-day basis, you are an expert in your business. And I have really found that having an accountant on my team, they are the expert in their business. So just like in your business, you use terms that aren't common terms. Like in our business with graphic design, we use terms like PNG, PDF, PNG, bleed lines, JPEG, RBG, Pantone colors. We kind of have a different language that we use in our graphic design business. That if I just ramble that off to someone, if I say, hey, I need a document with a 1/8 inch bleed, that's a 300 DPI, that's a PDF cut ready. That's going to be foreign to a lot of people, but to us, it makes sense. And so think of that in your own business. What do you do every day that you have it in your head and it's simple to you, but it may be complex to other people? So I've really found by having an accountant on your team, some of these things that may seem overwhelming or you don't understand or may seem like a big task, that's their day-to-day language, that's their day-to-day roles. And so for them to help you with some of that is very simple to them. And so before you get overwhelmed, just remember that, yeah, Pete has a team of experts that can help you, and something to them is just as simple as, again, an everyday task that you perform. All right. Well, I would encourage you guys, I'd love to see you all back next week. We're going to talk about how to be seen online. This is a topic that I think is brought up in all the time in almost every meeting we do, about SEO, about search engine, about optimizing your Google reviews, and just really making sure that everything that you're putting out online is a good representation of your brand and your business. So I'm happy to stick around for any other questions. Otherwise, we're excited to see you back here at 9 o'clock next Wednesday. All right. Thank you.
Thank you.
Thanks, Julie.
Yep.
Thank you all for attending. Next week, we're going to invite a couple other native CDFIs to participate. So there'll be some different dialogue with different business owners from different areas of the country.
Great.
Okay.
Thank you.
Thank you.
We'll see you next week.